Good morning friends. In this video we are going to deal with the three issues. All these three issues are in relation to a private trust created under a will, and all these three issues are independent of each other. The first issue: whether a trust created under a will be entitled to claim benefit of slab rates or it will be taxed at MMR. Second question: in a case MMR is applied, whether it would be at the highest rate, the surcharge would be at the highest rate, or it would be a rate which is otherwise applicable. And the last: whether a trust created under a will be entitled to the benefit of chapter 6A deduction, that is ATC deductions, etc. etc. Let us deal with all these questions one by one. The Honorable Ahmedabad ITET had an occasion to deal with the first issue, that whether a trust created under a will be entitled to be taxed at slab rates or it would be taxed at MMR. What has happened in this case is assessee has filed return of income claiming the benefit of slab rates. The return was processed under section 143(1). The CPC denied the benefit of slab rates. Assessee filed an appeal before the CIT appeal. The Honorable CIT appeal confirmed the order of CPC. Hence, assessee knocked the door of ITET. As a matter of fact, CIT appeal not only confirmed the order of CPC but also went on adjudicating what should be the surcharge that needs to be applied when an MMR is to be levied on the assessee. So now the matter is before the Honorable Income Tax Appellate Tribunal. The Honorable Income Tax Appellate Tribunal considered a CBDT circular, section 164, section 167B, and an earlier decision of Ahmedabad ITET, and considering all those things, the Honorable Ahmedabad ITET held that the assessee trust is one which is created under a will and hence it falls under an exception which is carved out in section 164 subsection 1. Section 167B provides for taxation in case of association of person. The assessee trust falls in second proviso to section 164(1), which is an exception to section 164(1), and wherein it is provided that a trust which is created under a will, and if it is the only trust which has been created, then it will be taxed as association of person. Section 167B provides that in case of an association of a person where the share of the member is unknown, it will be taxed at MMR. The Honorable Ahmedabad ITET held that section 167B is a general section, whereas a specific exception is carved out in section 164 subsection 1 clause 2, and hence the specific clause would prevail over the general provision, and it was held that following the earlier decision of Ahmedabad ITET and the CBDT circular that the assessee will be entitled to be taxed at slab rate and not an MMR. This was the decision of Ahmedabad ITET. Now let's deal with the second issue. The second issue, as I mentioned, it is independent of the first one. In a case where MMR is to be applied, let's say the income is way below 50 lakhs. Despite that, the surcharge is to be applied at the highest rate of 37%. Let me first deal with Bangalore ITET. The Bangalore ITET has held that the surcharge is to be applied at the highest rate. But we are fortunate that we have Pune ITET, we have Bombay ITET, as well as we have Ahmedabad ITET taking a view in favor of assessee. Now this takes me to the last question: whether a trust which is created under a will be entitled to claim the benefit of chapter 6A deduction. The answer to that question is yes. the assessee trust would be entitled to claim the deduction of Chapter 6A, and we have for that direct rulings of Honorable Madras High Court on this point. I hope friends this video would be of some benefit to you. We'll see you soon in the next video. Till then, please take good care of yourself. Thank you.